India is promoting natural gas as a transition fuel as it moves towards using renewable energy as the main power source. In the upcoming panel discussion, we'll hear our panel of guest speakers discussing the developing gas-based economy for shaping India's energy future. I would like to invite Sudheer Singh, editor ETEnergyworld, the Economic Times, to moderate the discussion. Over to you, Sudheer.
Ladies and gentlemen, a very good morning to all of you and a very warm welcome on our platform. I'm Sudheer and this is a panel discussion on developing gas-based economy for shaping India's energy future. With a really eminent set of panelists that we have today, including Mr. E.S. Ranganathan, he's the Director Marketing for GAIL, Deepesh Nanda, CEO GE Gas Power South Asia, Nakul Raheja, Country Head of Shell Energy India, and of course, Mr. Akhil Mehrotra, he's the MD and CEO of Pipeline Infrastructure Limited. Mr. Ranganathan, let me begin this discussion by asking you to comment upon your overall view on the development of India's natural gas sector. As a country, do you think we're making the right moves in the key areas of production, supply, distribution, imports, or even market development? How would you respond to that?
Good morning, everyone. Looking at the current situation of pollution in Delhi, I think it's in the mind of every citizen. How to reduce the pollution levels in a long term and development of a gas-based economy is one of the alternatives for shaping this India's sustainable energy future. Last week at the COP26 Climate Summit in Glasgow also, our Prime Minister laid out a vision to achieve a net zero emission by 2070. This is a revolutionary move, strongly showcasing India's economy's reorientation towards a cleaner and a lower emission economy. We now have a definitive policy direction towards phasing down of coal from primary energy mix, with our targets carefully calibrated to account for India's energy needs. Against this background, gas along with derived products such as blue hydrogen and ammonia will have a greater role to play in starting down the slope from peak emissions to net zero emission. A number of policy initiatives across multiple areas of compressed biogas, LNG in heavy vehicles, CNG, etc. are already being taken by the policymakers and industry also to rapidly grow the share of gas from the current 6.2% to 15% in the primary energy mix. When taken as a percentage of total energy demand, share of gas is only 2% yet. So the sector will undoubtedly see a strong demand on account of the value proposition that this policy represents. This value is strongly demonstrated by a strong demand growth of around 12% CAGR from the CGD sector. With the consumption figures now exceeding pre-COVID levels, I think we are well positioned to see aggressive growth in the sector going forward. Today, the total gas consumption is more than 174 million cubic meters per day, and this is largely by fertilizers, CGD, and power. And LNG is at 51% of this, 49% making up the domestic production. On the supply side, we estimate that the country will reach around 380 million SCMD per day by 29-30 with the indigenous production and import of LNG. Plus also we expect that the compressed biogas will be contributing significantly. In our assessment, LNG will continue to play a leading role in meeting India's gas requirements in spite of the strong and welcome upswing in domestic gas production. The indigenous production has already jumped around 20 million cubic meters per day in the last quarter. And now we have that the domestic gas already is touched the 40 to 50 million cubic meter in the coming years. CBG has an important role in addressing our air quality because it also takes over the raw material which contributes to the pollution, as well as it gives rise to a clean fuel. The government has embarked on a very, enterprising policy network for generating or, promoting 5,000 units of CBG across the country, and at least 40 million cubic meter is expected to be supplied from here. The continued reliance of LNG will require additional regas capacity also, and then we expect that the regas capacity will increase to around 40 MMTPA. We have our own Konkan LNG Limited, which is actually operating at a 60% capacity because of lack of breakwater facilities, which we are building now, and it will be made an all-weather terminal. And also in the contracting side, we fundamentally see a value in long-term contracts because of the strong volatility that we are witnessing in the spot market. With multiple suppliers now operating freely across the regas and pipeline infrastructure, customers can be able to choose the best supplier to meet their expectations. And this is a very big positive for the demand growth. I would estimate on demand also roughly around 380 million cubic meters per day on the conservative side, and on the optimistic side around 550 million cubic meters per day by the end of this decade. And we also expect that the growth of renewable will be actually an opportunity for gas to grow, because gas being the lowest carbon emitting alternative to that. So whenever there is the renewable energy is not there, gas can pitch in, and then we can have a low carbon emitting generating mechanism in place. However, we are also looking at the growing pie of gas by also blending hydrogen along with CNG, for which a pilot project is on in Delhi. And looking towards the end of this decade, I see that three sectors. One is the use of gas in new industries like blast furnaces, steel, etc. Then LNG in heavy transport and long-haul transport, and also a tri-generation and combined, CHP cooling heating applications that will contribute around 60 million cubic meters per day. And the CGD supplier entities, which are a very big growth driver as on day, they are taking 35 million today, but they are expected to grow to 140 million in the next 8 years. Another area is the refinery sector, where today currently the consumption is 14 million, but it is expected to reach 58 million by the time the conversion projects which are in place are completed. Historically, the prices have been actually dictated by the supplier, because it was basically a supplier-driven market until now. But now, with the spot price going up to $35 per MMBTU from a very low of $2 per MMBTU in June, now the price is a bit volatile, and that is a matter of great concern to all of us. What we see now today is the result of multiple reasons. The main one being the long winter expectation, and then there are supply disruptions reportedly from Russia. Then there is also a drought in South America, which is pushing up the LNG demand. And there is a growth for gas for power, because the economies have been rebounding from COVID impact, and this has given for a boost to the gas-based power. Now what we see is that this great volatility is not liked by anybody, whether it's a buyer or a seller. So we should look for a long-term, stable and healthy price for gas to grow. In the commodity market, now it is very challenging to predict the market in a long run. The commodity business is cyclical in nature. Last year, when spot prices were low, buyers wanted to buy everything linked to JKM, which is a spot index. Whereas this year, now buyers are all looking for long-term contracts. And there are different pricing structures based on HH, Brent, TTF, fixed head price also, and JKM and West India marker also. In line with the vision of the government to increase the gas share to 15% by 2030, the infrastructure also is being rolled out in a very fast manner, whether it is pipeline infrastructure, the CGD infrastructure, regas terminals, or LNG stations to cater to automobiles. Now, we also have a lot of bio-resource. So government is aggressively pursuing the generation of biogas through multiple schemes. And this, we are expecting that at least 5,000 CBG plants will be producing 15 MMTPA of gas in the next 10 years. Already 2,500 LOIs have been given and work is on the first 100 plants. And we expect production to happen by next year around mid-June, July. There is another field where gas is looking up is the small-scale LNG. This small-scale LNG can be LNG by trucks or even modular liquefaction and gas treatment units on pipeline hubs. And we are seeing that the CGD space also has been very vibrant, and they are also looking at virtual pipelines and using LNG for supplying to their markets. So a tremendous potential exists in ancillary manufacturing also, which is related to the gas sector, like dispenser, compressor, meters, and pumps and other equipments. So we are expecting that at least around 12,000 crore will be invested in this sector in the next 5 to 8 years. Total investment opportunity across all segments of gas chain over the next 5 to 8 years is pegged at around 1,60,000 crores. So as the world transitions to a low carbon future, LNG and CNG has emerged as a sustainable and cost-effective alternative for the transportation sector. We are also aware that the waiting period for filling of CNG vehicles are great in very big cities. And this is a priority area to be taken up by the Indian manufacturing sector. And we need to have quantum jump in this area, which will stand us in good stead if CNG and also the subsequent blending of hydrogen will achieve a critical mass of growth. And the CNG sector will grow at 12%. And now we are also going to have 11th round wherein another 65 GAs are coming up for bidding. And in the area of hydrogen transportation through pipelines, virtual pipelines through LNG, new hydrogen electrolyzers, etc., there are additional opportunities which we are all exploring. I think the ecosystem for marching towards a gas-based economy is ready, and we just have to ensure that all the stakeholders take right steps so that as a nation, we are able to meet the vision laid by our Honorable Prime Minister to achieve a net zero emission by 2070. Thank you.
Okay. Yeah. Thank you. Thank you, Mr. Ranganathan. Thank you for that very great, context setting that you have done there. Fairly detailed. You have covered every single thing that we are going to talk about in this discussion. One question that comes to my mind, naturally, of course, as a result of what you have talked about is, and very briefly, if you could answer that. You said that, and you rightly captured that there are so many budding areas, right? Whether it is LNG, CBG, or hydrogen itself, areas which are related to proper development of natural gas sector. But at the same time, it's a fact that it requires policy clarity, policy stability, etc. So for newer areas to for areas that are budding to actually grow and develop significantly. Where do you think we stand as a nation on that front?
I think we are witnessing tremendous dynamism and policy clarity in this sector. And on the one hand, we have great initiatives in the production E&P sector, where we are seeing there are we are already seeing the results, like 19 to 20 million cubic meters have started flowing in the last 6 months to 9 months. So that will provide more fillip to the domestic E&P sector. Then you have also seen a policy push on CBG, which has been supported by the public sector, including GAIL. And we are happy to see aggressive participation from private sector also, and also infrastructure developers in the CBG sector. And this is a learning curve that India needs to climb with respect to CBG, but this is something which we can really make a major impact going forward. And LNG being a completely market-driven area, and with around 10 suppliers now present, now I think that the market is quite mature and customers can choose their suppliers, and that will help them finding an optimal supplier solution. Of course, the cost-effective solution for their industries. And the new 11th round will also is a example of the government's push for increasing the reach of the natural gas. So now 90% of the population in the country will be having access to natural gas once this round is fulfilled and minimum work program is done.
Yeah, okay. Thank you again for that comment. And one last thing that I wanted to ask you very briefly, if because you have to leave for a meeting. What is talking specifically about GAIL's own focus? What is the larger focus of the work being done by GAIL to very broadly aid to this government's efforts at building a gas-based economy? And if you could share maybe one or two examples from the point of view of learning from the point of view of gas marketing projects. Yeah.
Of course, GAIL is in the forefront in the policy push for increasing the gas, the share of gas to 15% as far as the primary energy market is concerned. So we are there, and also if you will see that we are also doing the building around 18,000 kilometers of pipeline, which is actually increasing the pipeline reach. The northeast will get connected. There is a Bruni-Guwahati pipeline, which then afterwards taking it towards the all 7 states of natural northeast. So this is another area where GAIL is pushing the infrastructure growth. We are also a great player in the CGD sector with 61 GS. So GAIL is there to actually in the forefront to implement the government policies, various policies, and bring the natural gas contribution to primary energy market to 15%.
Thank you for that comment, Mr. Ranganathan. Now let me turn to Deepesh, and Deepesh, I could see that you are very keenly. How do you, Deepesh, as an industry leader, how do you view the very rapidly evolving natural gas landscape in India from the point of view of the commitment that we have for increasing the gas share in the energy basket, which is the talk of the town. Secondly, we are also making efforts at boosting the investor interest in this sector. And also, there is a need to significantly expand the distribution network and then the kind of supply trends that we have for industries like power, which are the end use consumers. So how do you look at this sector from these 3 points? Yeah.
Thank you, Sudheer, and I must thank Mr. Ranganathan for giving us his extensive brief. That was fascinating. I represent the consumption side of the industry, and I come from the power generation background. If you look at the recent announcements which have been made, and the most significant one was at the COP26 when our Honorable Prime Minister mentioned that we will be net neutral on carbon emissions by the year 2070. The action items need to unfold from here on. And I think that's where gas can play a pivotal role. If you were to pivot from, say, a coal-based power plant today to a renewable plant, you can probably reduce emission in the range of 25% to 45% because renewable is intermittent. You will still need to run the coal plant. Whereas if you switch from coal to gas directly, you can probably bring down the emission by 50 to 60%. Now, if you extend that logic a little further, And if you say that I'll switch from coal, but not just to gas, but a combination of renewable energy plus gas, then that reduction comes down to like 65% in terms of CO2 emission. And then if you take another step further and say that I'll pivot from coal and now I'll do renewable plus battery plus gas, you can bring down your carbon footprint to as low as 80%. Now, this is where I think an opportunity presents itself. And that's where gas will play a pretty pivotal and major role in helping us achieve the target of net neutral by 2070. What are the issues in doing this? I'd say there are two primary issues here. One is the cost of natural gas. In the split between domestic natural gas and LNG, domestic natural gas will be used for purposes which are of significance from a country's point of view. Like you would want to give it to industries, heating loads, and so on and so forth. There's a big automobile driven requirement for natural gas, and that will probably satisfy the domestic users of natural gas. And hence you're left with LNG. Now, while we have the infrastructure, and I must again compliment GAIL on building the network of the pipeline that we have within the country, but then we are always subject to the vagaries of pricing. So that's the only caveat that I would throw in, that given the pricing of natural gas where it is today, maybe the affordability is questionable. Now, if you come back to my earlier comment that if you add the combination of renewable plus gas, then the cost equation kind of gets itself moderated given the relatively low price of renewable-based power. So the net price to the consumer is quote unquote within that affordable range. But still at $30, I don't think it'll make a business case. I'm just hoping, as Mr. Ranganathan said, that the winters this year across the globe are forgiving, and a few of the outages that are there in liquefaction, companies are addressed and supply bottlenecks are removed. So that's one in terms of the affordability part. The other is policy, and that's a big one. I think a clear policy by the government where they encourage use of natural gas-based power plants to balance the grid, to enhance the use of renewable energy by the virtue of balancing the intermittent power that it produces with the baseload power that a gas-based power plant would produce. The combination of that will only enable us not only eliminate carbon dioxide, increase RE penetration, but also increase the percentage of use of gas in the economy, which has been targeted to 15%. So these are a couple of thoughts where, from a consumption point of view, where gas can play a role in meeting the 2070 objectives of COP26, net neutral. And I'm so proud that India actually went out there and made this announcement in so many words that we will be net neutral by 2070. Gas definitely has a big role to play in that.
Deepesh, thanks for that great comment, and really thanks for talking about this combination. As against, let's say, standalone RE, we have a combination of RE plus gas plus battery, and that can go very, very far and help us in further reducing emissions or move towards decarbonization. But it's one thing to have that as a strategy, but do you really see India adopting that strategy? Where do you think we stand as a nation when it comes to be able to understand the importance of this strategy and working upon it?
I'd say that there are some green shoots, but there's a long way to go. The green shoots are in terms of the requirement currently by, say, organizations like SECI. When they buy renewable energy, they are insisting for a round-the-clock flavor to the renewable energy. Now, within that round-the-clock flavor, if there is parity, if there is a level playing field offered to gas-based power plants, then that will enable players to come and bid for RE plus gas. And when you do RE plus gas, all things being equal, I think that will be the lowest cost of electricity that you can generate at a cost of less than $10 per MMBTU natural gas, which I think is the historical 10-year average where the prices are. I think historical average is probably less than $10. So if you were to correct the current aberration where the prices are and expect that they should correct themselves rather quickly, then a combination of RE plus gas that I mentioned is affordable. And in terms of where India is currently, the first two tenders of the RE RTC round the clock have been bid out. The first one ended up being a pure play, renewable play. So what happens there is that if I have to offer round-the-clock electricity through only renewable assets, I'm going to oversize my plant. The second one is a combination where you might be tempted to add coal to cycle and to play the role of the firming agent in the infirm RE portion that you have. That, to me, kind of defeats the purpose. I'm also questioning that will there be financing available on anything to do with high carbon? And that's why I think if the RFPs that SECI or any state government or central government entities, when they release for renewable energy on a round-the-clock basis, should offer the policy which is at a level playing field, if not at an advantage to gas, at least at a level playing field, which will, help people compare gas to coal to any other backup source of electricity that can give you consistent 50 hertz balanced power. So that's one big requirement, as an industry voice is what I would request. The other quick input on what we could do to help the cause is to look at load centers in large cities, like say, for example, Mumbai. 12th of October last year, Mumbai experienced a blackout. And then when an analysis was done, it was found that the islanding load that Mumbai originally was designed for today is insufficient to cater to the demands of Mumbai city. Let God forbid, if something were to go astray with the grid, you would need an islanding feature. Today, that city starves of the capacity that's needed to island Mumbai city. And one sure shot technical way to island it when things go wrong is by coming up with gas-based power plants. They're known for the quick ramp up, ramp down. Even in the past, in 2012, when there was an outage in the northern grid, New Delhi, major parts of New Delhi still had electricity because there was a gas-based power plant islanding feature available in New Delhi. So the islanding feature based on the load requirements of major cities using gas-based power plants is another practical way, not only to protect them from outages, but also to give you relatively low carbon, cleaner sources of electricity.
Thanks, Deepesh, and what wonderful and very, very relevant comments, no doubt about it. Let me turn to Nakul now, and first of all, of course, what according to you is the current set of affairs, the current state of affairs when it comes to the positioning of natural gas in India's energy basket, and how do you see that role of gas evolving over a period of time, given the huge and significant ambitions that we have for a gas-based economy? From the point of view of technology or policy or investment inputs required, what's your overview?
Thanks, Sudheer, and thanks, of course, for having me on this panel as well. It's great to be able to join my co-panelists and see so many familiar faces on this and a very important topic. So thanks for having me. I've basically been a gasman pretty much all my life, all my career. So this is actually a topic that has a lot of resonance with me. Mr. Ranganathan, of course, at the beginning of this discussion laid out quite comprehensively actually what the landscape looks like and what the picture is looking like in the country. So indeed, he's right. I mean, the way I put it is, I think gas is already playing an important part in our energy mix, right? 6% is already significant. And whether you talk about an ambition of 15% or 20 or 25%, that direction and that trajectory is quite clear. And indeed, that is the right direction that we need as a country. And I think Deepesh pointed out very rightly, anything that we're looking at, which looks at, well, of course, net zero in 2070, which kind of can feel a long time away, but also the Honorable Prime Minister laid out quite ambitious goals in the near term for 2030. So if we are looking for, increased penetration of renewables, then indeed, gas, as I think Deepesh articulated very clearly, gas has to play a bigger part. And why do we say this, right? I mean, fundamentally, even before we come to the kind of technologies, we have to remember, we are talking about ourselves as a growing economy. We're talking 5 trillion and then 10 trillion next, and hopefully continue to grow, well beyond that. And all of that growth is going to be premised around the availability of energy. Both availability and reliability, and I agree with Deepesh as well, affordability of that energy as well. But equally, India as a country cannot follow the same pathway for that growth of energy that other major economies have taken in the last century, right? I mean, the planet just simply does not have the carbon budget to afford it. So fundamentally, we are talking about a growth in our energy that is cleaner than pretty much everything that's gone before us. And that's particularly where kind of gas comes in and has a particularly important role to play. Gas also provides energy security. I think people have, perhaps not paid enough attention to this topic, and I really want to draw attention to the role energy security will play, particularly through this transition. Until we have storage in adequate quantities and at an affordable price, we have to be very clear about how we transition from our existing energy mix to a low or no carbon, energy mix going forward. And protecting our energy security, I mean, the examples Deepesh gave, for example, for Mumbai and Delhi speak to that theme as well. And gas, again, is an incredibly important tool that we have in support of our energy security during a period of tremendous growth. If I take the numbers that Mr. Ranganathan set out, he said at the lower end, they're talking about 380 million cubic meters a day of gas. That's more than doubling where we are from today. And at the higher end, we are practically almost trebling. So, you're talking about a tremendous growth in our overall energy mix and correspondingly in our gas mix, and which will support that growth. The second point, and I think Mr. Ranganathan dwelt on this quite well as well, is the role gas can play in supporting the improvement of our air quality. Right? He opened the discussion talking about our current conditions. And of course, gas can play a role in making sure that our skies stay cleaner and we take out a lot of the pollutants that other liquid or potentially solid fuels would otherwise introduce into our skies, particularly as we, like I said, use more energy going forward. And finally, of course, Mr. Ranganathan talked about new applications, well, for gas. A number of sectors, the hard to abate sectors, whether it's steel or cement, or indeed heavy duty transport, will eventually transition to extremely low carbon fuels in the future, but those are not immediately available, or if they're available, they are not immediately affordable, right? So gas, again, already can play a role in supporting their decarbonization from today. And that's a contribution it can begin to make immediately. We don't need to wait for those solutions to all be ready and available at scale and at a cheap price for that to begin to happen. So again, this is another space where potentially, gas can play a particularly important role. So the potential is clearly there. Again, the infrastructure is being set up. CGD networks, again, has been talked about already. Pipeline networks has been talked about. LNG terminals as well. I'm sure Akhil will talk about pipelines as well in his comments. And of course, the supply side of the story is improving as well. To get to 50-50 on our domestic and LNG import side is actually a tremendous success story. Today, we are talking about domestic production being up roughly a quarter over where it was just last year. These are very substantial moves, in the market that is taking place. And all of that is driving, that growth to 174 million cubic meters a day, of demand that we are seeing. But of course, that's not enough, right? I mean, a lot needs to happen. I completely agree with what Deepesh was articulating for gas and power. I mean, fundamentally, we need to find a way for more gas to be used in power. That is the challenge, really, that's before us. You cannot have a gas-based economy with gas playing as minuscule a role in power as it does today. And the good thing is, and I completely take Deepesh's feedback around there are challenges around, well, particularly policy and indeed affordability. The good thing is there is enough technical and commercial innovation that has taken place in this market over the last decade. There's a choice of suppliers, of course, but I mean, Mr. Ranganathan laid out a list of price indexes against which gas is available in the country today. This wasn't the case 5 or 7 years ago, right? And you can therefore create solutions that meet specific requirements and manage specific risks of specific end use segments. So if power needs a particular play, there are solutions that are in place. You can't always solve it immediately. So if Deepesh wanted $10 gas today, I mean, of course, you can't make it happen today. But he rightly pointed out, if you look at long-term averages, there is a sustainable role where gas can be both made available and be made affordable to play in this mix. So he's right. I think, we also support tenders, for example, that SECI or other agencies might launch for round-the-clock tender, for round-the-clock power to allow gas to play its role. But in that level playing field, Deepesh, that you described, I would say we need to factor in the role that externalities play. Right? Today, it's all a price shootout. Nobody is factoring in the greenhouse gas impact, the SOx, NOx impact, right? Those things also cost us money in the form of reduced productivity, in the form of increased health costs, in the form of, what it means for quality of life, for all of us in the country. So we need to create a level playing field, but a level playing field that recognizes and acknowledges these externalities in the cost of power as well. And clearly gas, has an advantage to play in that space.
Okay, thanks, Nakul. What a wonderful set of comments again. This is turning out to be a very, very interesting discussion. Deepesh, do you want to respond to some of the things that Nakul said, or we can move ahead?
I just wanted to echo what Nakul said on the impact on environment, which should be costed and factored for in decision making today. Unless we do that, it will be very difficult for us to move directionally towards the point of net neutral carbon. Now, I don't know if the Indian economy is ready to start costing, say, for example, carbon, but then at least on a trial, on a pilot model, if we start seeing examples of how carbon tax is imposed on a trial basis, that probably will be the first step towards expanding this, and then we'll move in the right direction. So directionally, currently, there's no incentive for anybody to come up with a scheme that reduces the carbon footprint. Theoretically, good discussion, but then there is very little that happens in the real world practically. Everything goes down to cost, eliminating the cost of the environmental impact, that is left behind by the current solution. So I must thank Nakul for pointing that out.
Sure, and my own key takeaway is, when he's talking about this, this importance of having security during this period of transition, right? It's very, very important to understand that point. And of course, the clean air point that he's emphasizing upon. So moving ahead, Mr. Mehrotra, coming to you, let me ask you, as the operator of a large gas pipeline project, what, according to you, are some of the major challenges and also opportunities that exist, today for investors and companies in this sector, and whether you think the pace at which the pipeline infrastructure development in the country is moving currently, is that enough? What more needs to be done? Is that enough to meet the goal of increased gas share that we're talking about?
Thanks, Sudheer, and kind of good to be part of this panel along with my fellow panelists. First of all, I think I echo everybody's view that yes, the current share of gas in the energy mix needs to increase. Now, whether it will increase to 10% or 15%, yes. I still believe personally that it will go somewhere around 10-12%. And that's also huge kind of in terms of absolute energy requirement from gas. And that will throw out a lot of opportunities in the gas sector as we go along. And we'll talk of that kind of, right? But first of all, to answer your question on what are the challenges for the pipeline sector as such, which we operate, I think the biggest challenge which we have is the underutilization of the pipelines in this country. And there are various factors why this underutilization is happening. And I'll address this from both the supply side and the demand side. From the supply side, we know India is not a country where the acreages are great. There are good acreages, but we'll always be dependent on importing of gas kind of. So that's one. And most of these pipelines initially were built for a lot of hopes on the gas which will come from the domestic production, which has not happened. And that's why there's a lot of underutilization. Now, that's on the supply side. And now a lot of gas has to come from imported LNG terminals. We know the infrastructure of LNG terminals is adequate, but what we have seen in past, if we go 1 year backward, the price of spot gas was $2. Today is $34, and expected to go to $40 in December before it comes down post the winter season. very little spot gas is coming into India. So all this puts a lot of pressure on utilization of the pipeline, and India will always be a price sensitive market. So that's on the supply side. If we go on the demand side, from the customer angle, and I think both Nakul and Deepesh has talked of, worldwide, most of the pipelines are built on anchor customers, and one of the biggest anchor customers is power. Unfortunately, India, this anchor customer has been missing, and that's the biggest bane of pipeline development in developing this infrastructure in India, kind of. Now, whether it will come back in some form, my hope is, along with renewables, as my fellow panelists have talked of, at some stage, gas has to play its role. Gas-based power has to play its role in kind of the whole energy mix. And at that stage, I think a little more gas will flow into these pipelines. So that's one. Which sectors will play a bigger role? Definitely CGD. A lot has been done by the regulators, many new areas being authorized. However, the load buildup kind of from CGD is very incremental, and that's why anchor loads from power, which is kind of a load at a given point, is required for building these pipelines. But we are depending as gas pipeline operators on these gradual loads to build up and kind of then kind of hope that more and more volumes will flow. Obviously, the biggest driver of growth will be CGD and transport and mobility. From this, definitely we hope that a lot of volumes will start coming into the pipeline sector. This being one of the biggest challenges, how do we resolve it, kind of, right? And there are various ways to resolve it. While and I'll talk of that various new ways of investing in pipelines can be brought, a lot of funds can be done. But going back in history, if you see, one of the biggest challenges have been the way the tariffs have been calculated for the pipeline also. Other than the demand and supply side, the regulation provide for post-tax 12% returns. However, the volume risk has been left to the developers. What it does is there is a cap on the upside when a developer comes and builds a pipeline. However, there's no kind of flow there. And if you don't flow any volumes, you don't get any returns, kind of. And that's where I think the whole problem has started. And in past, we have seen with competitive bidding, people have and companies have bid very low, and these pipelines have not come in. What I expect from government is to revise these guidelines, bring in more rational bidding criteria. What they can do is maybe have a viability gap funding where entity bids possibly positive or negative, depending on what they feel the pipeline can do business for, and then kind of give them 12% post-tax return. So a lot can be done on the policy side to a little bit streamline what has gone wrong in the past and learn from the past, while we look at kind of demand growth from various sectors, and with softening of maybe gas prices in the future, a kind of new gas will come into it. Your second question was what is the problem in, or what's the pace of development of these pipelines in India? And again, while you develop pipelines in India, there are a lot of issues which you face. One of them is right of use, right? When you have to lay a pipeline, and we know companies like GAIL, and Mr. Ranganathan has left, but they face huge issues in laying pipelines in south of India. What can be done? And there are lessons from other sectors to be learned. Road sector is a point in view where what NHAI does is, before they bid out a road, they get all the land clearances where the road has to be built. So maybe the regulators, the ministry can look at that model and say, okay, we acquire all the ROUs and then give it to the developer to build these pipelines. What it will do is it will de-risk kind of the time part of the building of the pipeline, and kind of because developers which are there in private sector are ready to take the risk of project getting late, but not the risk of delays because of political consideration and so many other things, kind of, right? So that's another thing which we have to keep, because of which pipelines are getting delayed. Other thing which we have to bring into the sector is there are a lot of areas where now the government has realized that they're unviable for developing pipelines, and they started giving these pipelines to the PSUs, and these are unviables. And once they become viable, possibly they can be divested, and we can talk of detail the various models of divestment which can happen. But obviously, I want to end with saying, okay, while there are a lot of challenges, I have a lot of hopes for the sector. There are a lot of good things which are happening, and it will be wrong on my part not to bring them to the table. The government and the regulator has done great things in past. One other thing is that they're bringing in unified tariff. What unified tariff will do is that they will make the pipelines, which are very far off from the sources, more viable, because there'll be just one tariff a customer has to pay, whether he buys gas from east of India or west of India, and he may be situated up north, where otherwise currently there's a lot of pancaking of tariffs. So unified tariff will be a very great thing in medium term for India, where the utilization of gas as a fuel will increase. Other thing which they are trying to do is bringing TSO, which is a transmission system operator. What TSO will bring is they bring in transparency. Now we are, as Pipeline Infrastructure Limited, a pure pipeline play company. Hence, anybody comes to me, I'm happy to give them open access, because that gives me revenue. But there are other players in India who are bundled. So unless they do unbundling, possibly that will help developing market, they can bring the TSO. And what the role of TSO will be to allow and make open access happen for various kind of shippers which are there in India, and that will also help develop the market. And last thing, there is also the gas exchange. If you see in power also, gas exchange started playing its role more than 2 decades back. In gas sector, the gas exchange has started on a small way. More and more market players will come into the market. More and more gas will start trading on these exchanges. And once you have more market players, more infrastructure, more gas, and that's something which we are looking for in developing the gas market. And I'm definitely hopeful that all these hurdles which we face today will be overcome, and gas will, along with renewables, will play a big role in the Indian energy mix.
Okay. Thank you. Thanks, Mr. Mehrotra. Again, there's something about the discussion, the kind of comments that are coming in, absolutely great. You are basically, you started by saying that, there's the problem of pipeline operation is that capacity utilization is low because of low supply and low demand kind of scenarios. Power projects are not really taking off. So, and the kind of growth that is coming in from CGD is only incremental. And then you're suggesting policy tweaks, for example, or some changes in guidelines. For example, it's a good idea to say that, before bidding itself, to take care of the ROU issue, the government can, resolve the land acquisition part of it, and then bid, and then invite bids for the projects. That's again something that requires a wider debate. But let me turn to Deepesh again and ask you. We have opened a lot of really, really important topics and a lot of really interesting topics for discussion. But coming back to the overall gas sector, and in the entire background of the energy transition and the climate change priorities that we're talking about, how do you see the role of gas sector and the company itself, GAIL, over the next few years, in terms of 2-3 things? Let's say technology adoption. Where do we stand in terms of project execution, policy recommendations, etc.?
I think in terms of power generation, the world is buying 30 gigawatts every year of gas-based power. 15 of that is in Asia. Now, India is a large economy within Asia, but again, it's a very small gas power market currently when it comes to gas power on the state grid or the national grid. However, I must tell you that there is a hidden secret of fantastic work done by gas turbines in captive power plants. India has close to 300 captive gas turbines in different captive plants across the length and breadth of the country, which power petrochemical, refinery, steel plants, fertilizer plants. So if you were to add that capacity, I think on an overall install basis, we are at least 15 to 20 gigawatts of just that installed capacity. The other point that comes to mind is India should encourage the private entrepreneur to come back to the game and start building IPP power plants through a policy that's enabling. 3 things that we can do. One is allow pass-through of natural gas. That's a big decision that needs to be taken. The risk of the fuel should be with the state. If the state takes the risk of the fuel molecule, and the state is in a capacity to take that risk because then the state becomes the buyer of fuel. State has the negotiating power to, enter into large contracts. Number two, have some sort of a sovereign guarantee on PPAs. The power purchase agreements should be backed either by a ministry guarantee or just ensure that there is no default on any PPA. In the last few years, we've heard murmurs of default on PPAs. If that is the case, then you will take investors away from the game. And number three, ensure that the policy framework is uniform across the board. That will encourage both the state and the center to encourage IPP, private sector producers to come and make investments in India for IPP grade large scale power plants. Because in the first section of this discussion, I think we agreed that in the energy transition that's taking place, gas has a vital role to play. But then how do we do it? And I think one way to do it is to get the private sector into the game. The state will always be a buyer in terms of their own power plants. But then since generation has been opened up for quite some time, the gas piece has been missing there. I would say partly due to notifications issued way back in 2012, 2013 by CEA, which just gave a carte blanche notice that no gas-based power plants. I think such announcements should be withdrawn and a policy framework should be announced, on the contrary, to encourage gas such that India has a larger play in the renewable business. Now, we've added 100 gigawatts in the last 7 years, close to 100, right, from 2014 till 21. What we now know is that at this rate, by the year 2022, we'll have a curtailment of close to 20 to 22% of that renewable energy that we have added painstakingly. And that curtailment can be avoided by balancing that with natural gas. So you will save money, you will have more green energy in the system. Now we've gone ahead and we have said that we will take this 175 by 2022 to 450 by 2030, and that number now reads at 500. At that number of 500 gigawatts, you're actually staring at a curtailment of almost 46 to 50% of RE. And that 46 to 50% curtailment of RE can again be avoided through a few interventions, some at the grid level, but many of them through backup power sources. It could be hydro that can play a role, it could be batteries, but it could definitely be natural gas. And when you do the analysis, you'll find that the cost of RE plus gas at a price of gas less than $10 will be the most affordable. Currently, it's not convincing enough for us to speak on the viability of gas, just given the current pricing of gas. But that's an aberration. And once that corrects itself, this equation will start working.
Thanks, Deepesh, for those comments. So when you say a fuel cost pass-through, you're basically saying that the current model where the regulator allows for a change in law, kind of a clause to come in and say that we can compensate for any change in significant change in fuel prices. That's not enough. That's what you're saying.
Have a very clear, simple policy that when a bid is evaluated, it's evaluated at a particular heat rate or the consumption of natural gas as a fuel at a particular price point only for evaluation purpose. Then as the plant operates at that heat rate or the consumption of fuel, the fuel will be a pass-through. Whatever is the cost of the variable cost of power, courtesy the cost of fuel that gets converted into electricity, is a complete pass-through. That's bought by the state, paid by the state. The project gets paid only through the fixed tariff, which is the capacity charge and the O&M charge. But the pass-through of the fuel, that's important. Today, for example, when you make a bid, when you have, say, for example, in the RE-RTC bid, there isn't clarity on this. There isn't clarity. We've had to advocate, and I must appreciate organizations like SECI who have been open towards taking inputs from companies like GE to define how will gas pricing be considered in the electricity tariff model. Will that be a pass-through, or does the entrepreneur have to take the risk on the fuel cost? If it's the latter, I can tell you, you will not have any investment on natural gas-based power plant. It has to be the former. It has to be an internationally proven model for decades that gas will have to be a pass-through. And I wouldn't want to complicate the matter through an indexation formula. Also, if the ask is to forecast that today you make a bid and then you'll have to forecast that by the time the plant is constructed, what will be the price of natural gas. Now, this is something that nobody can venture into. And hence the ideal model is you take a template price of natural gas only for evaluation purpose so that everybody is evaluated at a common price point of natural gas. And then when the plant is commissioned, the price of natural gas then, which is linked to an index, is a pass-through. The state buys the natural gas through one entity, maybe say, for example, GAIL supplies natural gas through a pipeline to this power plant, and the buyer of that electricity, it could be say an NTPC or it could be a state Genco, buying that electricity pays for the cost of natural gas on an actual pass-through basis.
Very relevant and very fair comment again, Deepesh. Nakul, you have listened to this entire discussion, and what I'm tempted to ask you is, when it comes to business or economic areas like the development of LNG-based transport, for example, can you comment on the market potential that exists in India and let's say the specific business opportunities or the emerging trends going forward? These are some of the things that Mr. Ranganathan also initially mentioned. LNG-based transport, as an area that's budding.
No, indeed, Sudheer, and I think LNG for trucks or LNG as a transportation fuel is actually one of the most exciting opportunities and new demand segments actually in the market. You asked about potential. The way I like to look at it is last year, if you look at China, right, 2020, China consumed 13 million tons of LNG as a transportation fuel, right? Again, put that into context. Last year, the entire import of LNG into India was about little over 26 million tons. So about half of how much LNG India imported went into China just for use as a transportation fuel in heavy duty vehicles, not only trucks, of course, trucks and some buses. A total of something like 600,000 vehicles in China were running last year on LNG, right? And that has basically been a number that has exploded in the last 5 years. So you're seeing tremendous growth in that space over the last 5 years. We're seeing this grow in the EU as well. The forecast for the EU is nearly 8 million tons of LNG going in as a transportation fuel by the end of this decade. So these are material numbers, when you look at, between 8 million tons by the end of the decade for the EU, 13 million tons for China and thereabouts. So PwC actually did a study for FIPI looking at the potential in India and actually came out with a similar estimate even for India. So we're looking at a demand of potentially in their base case of 14 million tons by around 2035. So getting to China-like scale within 10 to 15 years from today, if we get this right. So this is not automatic. This is just the potential that's out there, right? The reason I'm excited about this is because this is a segment in which there is no conflict between what's right for the pocket and what's right for the environment, right? Gas or LNG rather is the cheapest credible alternative and the cleanest credible alternative in this segment, simply because hydrogen's not ready yet and electric vehicles just don't make the cut in the heavy duty segment in terms of payload or range capability, right? So it's the right technology, it's the right affordability both, and it will end up displacing diesel. So again, it's the right thing for the country as a whole. And like I said, it'll be lighter on everybody's pocket as a result. But like I said, won't happen automatically. So we are seeing the government do a lot of things in the EV space, for example, where we're trying to encourage the uptake and adoption of EVs. We are seeing incentives in four-wheelers, in two-wheelers, and so on. My ask is, I think we need to look at LNG into heavy-duty transports in the same way. Because it's the cleanest, credible option right now out there, we need to incentivize the uptake of that. So a number of things we can do. Number one, today, the cost of an LNG truck is higher than that of a diesel truck by somewhere of the order of 10 lakhs of rupees, right? Part of that is also due to the fact that there is a GST rate of between 18 and 28% on various components, which go into that piece of equipment. Right, bringing down that rate of GST is one thing that can be done for a finite period of time, just while this segment becomes viable and then takes off on its own is one area. Actually, and this is true for gas as a whole, but particularly in this segment, bringing gas under GST is another very, very powerful driver, which can really change the game in this space. Eventually, the outlook has to be, we have to try and encourage the total cost of ownership of an LNG truck to come down. And that will then incentivize fleet owners to come in and preferentially opt for LNG over diesel, as a fuel. And in pursuit of our Make in India and Atmanirbhar Bharat ambitions, this will drive Indian OEMs to set up their own production lines in India for these types of vehicles, right? So Mr. Ranganathan talked about the ancillary business, which will get a fill up with all of these things. This is direct benefit to the ancillary business and to the OEMs directly themselves. So there's lots and lots of potential. If we get this right, we can make this happen at real scale, make a material impact in our own carbon footprint and in our import bill of oil as well. So like I said, right thing to do by carbon, right thing to do by cost.
Okay, thank you. Thanks, Nakul. Goes without saying, light in pocket and light on environment, no doubt about it. Very important from both the points of view, energy-based transport. And there is no dispute about it. It's just that, we are at a very, very preliminary stage of development when it comes to LNG, using LNG as a source of fuel for transport. But like you said, if we do these things right, it has a potential for significantly turning around the entire situation. And a very important comment there, no doubt. Can you, Nakul, from the point of view of benefit for our audience, can you share the details of Shell's India operations currently across business segments, and how do you see them growing over the next 4 to 5 year time frame?
Yeah, sure. So Shell, of course, for Shell in India is an incredibly important country. So we've got a massive footprint and a very large presence across a number of businesses here. We have over 9,000 employees in the country, and that's growing. So it's one of our largest employee populations around the world as well. We have a number of business lines which are operating. So we have our mobility business, which runs our retail activities in country. We just crossed more than 300 sites across some 6 states. We have a very active lubricants business as well, which does everything from conceptualization of the lubricant to their production and distribution in the country as well. The business which I run, which is our gas and power business, we fully own the Hazira LNG terminal, which is unique again in Shell's portfolio. It's the only terminal around the world which we fully own ourselves. And we deliberately made that decision about 3 years ago, total stake in the joint venture, because we wanted control over our own asset, and we wanted to connect our own LNG portfolio globally to our own terminal, and then allow us to go deeper into the downstream gas market in India as well, which is a massive priority that we're working on. We've also made investments in renewable energy. So we have subsidiaries of Clean Tech Solar and Husk Energy that operate in the country as well. And we're quite active in the startup space through our Shell E4 program and our ventures activity. So pretty much across this space, Sudheer, as India grows, we are looking to set ourselves to grow and succeed as well. So as gas grows, as more of the energy mix gets electrified, we want to bring in more of our global power expertise and try and create a viable power business in India as well. And along with that growth, we want to play kind of our small little part in effectively powering India's progress and supporting her clean energy transition.
Turning to you, Mr. Mehrotra, I want to understand, when you were commenting last, you talked about a lot of really important things. One of the things that is the talk of the town these days in the overall in the energy sector, in fact, is InvITs. And I want to ask you, how do you see InvITs playing a role in the development of the gas space? That's one. And secondly, the other important thing is hydrogen, right? Developing very fast, new technology. How do you think it should be viewed by the energy companies currently? You should look at it as a threat, or you could look at it as an opportunity. How do you want to look at it?
So first, let me talk about InvITs and I'll say this is one of the most important tools, not only for energy sector, but across infrastructure sector in India. I think InvITs can be used very effectively to kind of demonetize a lot of assets and raise capital. And as we all know, Niti Aayog and Ministry of Finance has come out with the national monetization policy, where a host of assets are being proposed to be monetized through various routes, and one of them is the InvIT route. Among that, if you see, it's almost $6 trillion, if I remember correctly, and out of that, $500 billion is for the oil and gas sector. Now, talking of what are InvITs and where do they get their money from? So basically, InvITs are bringing long-term capital. These are capital which is more coming from pension funds, which want kind of more of annuity kind of returns. And infrastructure assets across the board, whether it's oil and gas, roads, ports, airports, provide that kind of returns. So the important thing about InvIT is that, one, huge capital. Even we as Brookfield in India has brought in huge capital, invested, and there are many like us who are waiting on the wings to bring in billions of dollars to invest in India through the InvIT route. What it does is it brings in long-term capital for the country, because one thing which is very much required in the infrastructure sector is a capital which is for long-term, to a capital which is a little patient. You can't get super normal returns from day one, kind of. So, and this is what kind of InvITs bring to the table. That, one, you can provide a low cost of funds, because a lot of this capital is coming from outside India, where the cost of fund is lower. So the return expectation is not as high as maybe an Indian kind of developer or entrepreneur may have, kind of. So first part is very important, is bringing a low cost of funds. A lot of these InvITs, including us, we have a lot of expertise in operating these oil and gas and other kind of assets across the world. So we also bring in a lot of these operating experience and expertise, which is normally not there with any other finance companies. And the kind of money which is sitting outside will help in India in many ways. One of them is that it will free up capital for investing in new areas which may be unviable. And let me give you an example in this case, and I've been talking to ministries, that you're saying, okay, say northeast of India or east of India, the pipelines are not viable. Okay, let GAIL, being your arm, develop that pipeline and free up some of your pipeline which are kind of making reasonable returns, and divest them through an InvIT route to an investor who can operate it and make some money. And it's very important because the government is talking of that, why should we divest our kind of strategic sector assets. And the best thing about InvITs is you can divest this for 10, 20 years and then take it back after that. So it brings in all the flexibility to the government and to the divestors, that look, kind of you can divest these assets, take it back, and free up your capital for the time being for developing other assets which normally a private sector will not develop because it's not viable, and government has to pitch in that money. So it brings a lot of capital for the government of the day to kind of develop new assets and kind of raise money which is low cost, and kind of can remain in India for at least 2-3 decades to come, kind of. So it's a win-win situation for the InvIT player, for the government, and for anybody who wants to divest their infrastructure assets, be it oil and gas, whether it's pipe, terminals, roads, ports, or airports, anything, kind of. So I think that's what is happening in this sector. I expect that in next 5 to 10 years, you will see a lot of new investments coming through this route, which will be great for not only for the oil and gas sector, for all the sectors to come. Now, coming to your next question, which is on hydrogen, whether hydrogen is a threat or opportunity. I see hydrogen more as an opportunity. And when I say hydrogen here, and I think other panelists have spoken of that, is I'm talking more of a green or a blue hydrogen. When I say green or blue, green is what you produce through renewables, using electrolysis, and that hydrogen is termed as green. Blue is kind of using gas, but obviously you have to capture carbon and using CCUS technology, kind of, right? And why I talk it as a kind of a opportunity rather than a threat, because as I said in the beginning remark, that gas prices are going up. Imported gas prices we've seen gone to $30. I expect it to come back to $10 maybe by March next year. But again, India need cheaper fuels. Today, as we speak, the green hydrogen cost is much, much higher. The cost of production based on electrolyzers, which are available across the world, are around $20. But there are a lot of talk now that these will be manufactured in India, and hence the cost of producing green hydrogen will come to something like $7-8, which will be good for the Indian consumers, basically. What we are doing to make it happen is, and all our pipeline operators are doing it, we are starting with enabling our pipelines to be able to blend hydrogen to the extent of 5% by volume to start with, and gradually moving to 20-25%. This itself, if you even say 500 MMSCMD in future will be the gas requirement in India, even 20% of that will be a huge production of hydrogen through renewable means. So it will not only give a fillip to renewables, and it will add definitely to the natural gas, as well as increase the utilization of a lot of these pipelines, which may be not getting enough gas, kind of. So it's more of an opportunity than a threat. What is required to make this an opportunity is a lot of studies, a lot of work, which will take us next 2 to 3 years to enable that. But I'm very confident because we are working in a company to ensure that we can blend hydrogen to the extent of 5% in next 1 year itself. And hence, this is more of an opportunity. And we are looking at this space with a lot of interest. And I'll say, along with EVs, which has been talked about a lot, hydrogen is the next big space, which all of us have to watch out for in the energy space.
Thank you, Mr. Mehrotra. I sincerely believe that this is one topic which we can't just go on and on and on.
Yeah.
But then we have to bring it to a close. And what a fantastic discussion it is, to be completely honest. We started with Mr. Ranganathan's comment, very detailed, fairly detailed comments on the overall view of the gas sector. And that's a very good way of starting any discussion. And then we had Deepesh talking about, this, the way I would remember it, combination of different technologies rather than standalone RE, where gas plays an important role, and we must use it as a strategy. And of course, the point about cost pass-through that he mentioned, again, a very, very relevant and important point. Nakul talked about, and that's how I remember it, having this, using gas as a means to have energy security while this entire transition goes on from coal to renewables, etc. Very important point. And then LNG-based transport, of course, there has to be a lot of focus there. I would also remember the comparison with China, where China stand currently, and where do we stand at the moment. But then, yes, there are a lot of ifs there. If we are able to do a lot of things right, there is a lot of potential there. Again, Mr. Mehrotra has, talked about the entire, supply, demand, and how does that equation play out for pipeline operators, and what are the typically the challenges that they face, and looking at hydrogen as an opportunity, no doubt, and of course in WIPs. So overall, a very very nice discussion. Thank you, gentlemen. Thank you for your time. Thanks for taking out time to be a part of the discussion and share with us all these really, really important points. Thank you.
Thank you, everyone, for sharing your knowledge on developing a gas-based economy. Now we'll proceed to the next session. A quick update to explore the expo area for all the videos and presentations shared by the partners at their respective booths.